Okay, hey traders. Today I'm going to just start off by taking off these indicators, but this is a video I plan on doing for a while now. I'm having the same issue again where I recorded the video, but the audio is an issue. So hopefully, me going over again in brevity kind of jogs my mind over some of the things I wanted to talk about. But we're just going to start off with a zoomed out perspective of SPY, um, particularly out of that 2 year range. Yellow fib is that high to low. Um, if you look right here, this is the hourly, and I just wanted to point out the characteristics of the day. So, yesterday, or Tuesday rather, we did see some weakness and the potential of going back into that NVIDIA earnings gap. Um, but in whole, I'm pretty much just going to focus on the chop zones that we have been trading. Um, as you see, I also have the megaphone outlined, and you can also see the green fib. Green fib is my COVID fib, so from COVID high to COVID low. So starting here, you go from that 2022 high to 2022 low, and then the green fib there. I essentially just wanted to show out some key areas. First, in that green retracement, we have the extensions, so 1.618, 2.618 extensions of that range. As of now, we're pushing towards that 2.618. You see we broke above that high, that 2022 high, and at the time there was a lot of discussion of what, particularly the pattern leading into a cup and handle. But before that cup and handle, right there, we had a little megaphone expanding pattern, and the retrace. And if you look closely on that yellow fib, that retraces to where? That 0.5. So we just got barely under a discount. And before we got to that discount, you remember we were trading towards that gap fill, and we were prepared for, okay, if we see a deeper retrace in the range under that 0.5, what would we be setting up for? And then we also took longs before that move back up into the gap. And that's where we essentially positioned for our $500 calls. So now I just want to kind of just point out some of the things that I've been watching. First of all, before that high, if you look at between that 786 and 886, we have that relative equal high, which will prove to be a key area, especially when talking about those longer retrace levels if we retrace into the 2 year range. But as of now, we're trading up to 515.85, which is that 1.272 extension of that range. Generally, you would see profit taking there. In addition to that, I'm also looking at some of the other extensions that we have and this fib symmetry. So before I go into that fib symmetry, I want to just pull back and show you just like a brief little wave count. We had this move down here. The price levels don't matter as much as the type of move. So impulse one out of that range. We got that impulse, then pullback wave two. Wave two is typically less decisive, which is indicative of, after we broke under that high, we had a lot of people, sellers being loud, being like, okay, we're back in the range. Wasn't the case. Got wave three, typically longest, strongest, and then four retrace to wave five. After wave five, we did see a little bit of an extension, but as you see, pretty much through all the volatility that pursued after, typically came back to that area where the bullishness terminated before really building that support in our COVID fit. So along the same lines, what I'm looking at is, this 2 year range, the cup and handle. If we retrace into the range, which would set up a nice little trade into our megaphone at the beginning of the year, and then we also have our key extensions. So here I'm gonna just draw a little trend-based fib from that low to the pullback that we experienced towards the end of last year before the October low. And as you see, it's going to be on the pink fibs. The pink fibs line up perfectly with some confluence right by 520, so around 418.80 to 520. That's one zone of confluence. Next zone of confluence we have is pretty much like right by the previous highs. If you look, got 0.618 and that 479.98, just a little below the dash lines that I have shared. We have the NVIDIA gap, that's also key. And what I would say is, let's just zoom in here. I think I zoom in. Okay, so I think actually what I'm gonna do is outline the blue chart, the extensions, how I drew the extensions. So yeah, here's the symmetry that I outlined. I'm just gonna start with that quick zoom little session, and then we just take it from that low. So those two ranges on the retrace, and then that should show the measured move projected that we would want, correct? Okay, from that measured move, you see that we didn't really retest that 236, but in addition, we have some fib confluence there at that 236. So another reason why 454 to 444 key area to retest if we do retest. Now I drew the fib, the trend based fib, and then over that one ratio into the symmetry, I just drew a little zone. If there's another zone in which we consolidate or range, I honestly am thinking that's going to be it. Yes, we could trend higher to, the 1.272 of that extension or another range, but seems like that will not be the case. Okay, so now that I've highlighted that blue area, I'm going to head back into this chart. Delete that fib, the trend based, just so everything is continuous. And let's pull out a fib retracement. So next I would want to see a fib retracement of what range, that particularly before we made the retrace. As you see, we didn't go into the discount of the range, but that golden pocket area for sellers, so if we had been underneath and rejected where sellers wanted to reject, since we did catch bids, we did see continuation, but broke the continuation fibs, the previous swing high before the pullback into consolidation, which gave us that leg to break all-time high and go seek out higher. So now, I just want to highlight this 520, 534 key area right now, 516, something that we were looking at in the newsletter. But if you see, we're like high up in that range between that 2.618 and 1.618 of that COVID fib. So sometimes I do run fibs in between like such structures just to kind of get an idea. But for me, I think our longer time frame plays are key where, we don't have to catch the top of the reversal to know, okay, there's a megaphone below, volume gap. This could give us a nice trade to retest previous all-time high, retest back in the range. And similarly, we could keep staying on trend. We could go up to extensions, monitor level to level, and we don't have to, we don't have to squeeze too much. Like we can squeeze and go higher, but we don't have to take on too much risk. And this is kind of why I wish I had gotten the video out, because even though that pricing action is wonky, it did exactly what we were looking for, which was retest of what? 510 or the mid 506 area. We got well below that, and the buyers came in with a vengeance, which is not typical or not easy to trade. And honestly, if there was a swing entry to this next target, that was probably it. So here I'm cautious, but I'm also cognizant of the opportunity. We hedged under 509. And this was the relative equal highs at the time, that pink line, that Monday high from last week. And we broke underneath, but we came back above. So yeah, I do think that we still can flirt with our upside targets for higher. As you see, kind of where it's at is is really independent up to the trader, the trading style. And I don't think that risk is asymmetric long or short. I think there are plenty of opportunities on both sides of the market. And I think it is a little bit more difficult to trade here. I mean, the narrative for most of the rally has been what? Long mega caps, buy the dip in mega caps. But as I mentioned, some of those names aren't necessarily the most popular all the time. Apple got a move this week, as well as some antitrust news. Got it down at 170. We were talking about this trade idea at 180. Originally, when I was planning my video, I was thinking once, we could talk about Apple on 175. But right now, until it makes that swing low, it's going with that trend, that downtrend on the weekly. But a double top on Apple on the weekly may mean rotation into elsewhere. And unfortunately, these pullbacks, these Apple pullbacks, Google, Tesla, like you would think that like we would get a significant move in the market that would allow these pullbacks to kind of not gain more momentum, but instead like be more meaningful. So like when you have, market gap down and gap back up the next day, and you have that whole Apple move happen in between there, it kind of distorts the perspective. And I think that's a lot of what we're dealing with here is distorted perspective of expectations. And particularly now that those like strong bulls have stepped in, that megaphone trade just doesn't look the same without that confirmation of under 490. As you see, those are relative equal lows right there. um, and if you look, I'm kind of pointing to the fact that some of our targets from the newsletter are more than valid. With time, they may need time to play out on that megaphone trend line, but until we break into that trend line, we have that. Until we confirm under the gap, until we have that actionable lower high, you know, you can chase a down move on the index, but without the confirmation, you kind of end up with what's happened here. So I'm really curious is if 246 or 516 gets tested today. As of now, we're gonna rock with this. Probably not gonna initiate any long swings until we deal with that blue box or figure out 530, 560. What's the temperature of the water? How's the Fed gonna react? But otherwise, looks good from here. So hopefully, you guys are enjoying the new newsletter and have a great one.